Okay, welcome guys, my name is Gavin. In this session, this is a live trading session, so what I'm going to be doing is focusing on a specific event and discuss this event thoroughly and also wait for the announcement to take place, and then we can see what reactions takes place as well as how we're going to react to this.
We get the Bank of England rate decision.
So do remember I do have my squawk switched on at the same time, so you should hear that in the background.
While policymakers are expected to expand the QE program by another 100 billion from its current 640.
So let's get straight into this, guys.
745 billion. Forecasters also see the possibility of the committee lowering their rate of the bank's term funding scheme with additional incentives for SMEs. Just looking at Economist poll by Reuters.
Okay, I'm just going to turn this down. Okay, what is the goal from this session? Okay, so I want to discuss quickly what is expected to take place in regards to the event ahead. Okay, so let's bring up the economic calendar and let's discuss this in detail. So, the key point to stress at the moment is okay, so at midday we have sort of a number Heimbach data taking place, and the one that we're going to be focusing mostly on is the asset purchasing sort of facilities. Okay, so the official bank rate itself, the probability of this, increasing or decreasing, whatever it might be, it's not likely to take place. So it is seen as a non-event. We're not expecting there to be any changes to the interest rates. Having a quick look at the graph itself, you can see how at the start of this year we saw a sharp drop from around 0.75 down to sort of a much lower number where we're at 0.1. We're at 0.1, pretty much flat, and we're expected to sort of stay at this in this region here. Something else to mention is the prior governor of the Bank of England was Mark Carney, and he has stepped down, and Andrew Bailey, who was initially the head of the FCA, has now stepped in his place. So he actually made that emergency rate cut from 0.25 down to 0.1, which is unprecedented. This has never happened before, right? So if you sort of, go back multiple years, I mean, it's never been at that low, and I'm talking about, good 20 sort of 30 year, even more than that if you want to go back, right? So it's never been at this low. This is sort of the first time that this has taken place. Okay, so it's very unlikely that they're going to be looking to cut rates further or even raise rates because of the uncertainty with COVID-19. So there has been some rumors in regards to a potential negative rates, which could be a way for the Fed to be able to manage, similar to what Bank of Japan and the Swiss National Bank are doing. But that will seem quite unlikely. That will seem quite unlikely for the time being, because, let's go through it. Let's go through sort of the key points here. So, the official bank rate, don't worry about that too much. That's going to come out unchanged. The monetary policy summary will be an important one. That's the first thing that you should read, guys. That's the first thing that you should look into. But also, I'd want to be aware of the MPC official bank rate vote. So there are 9 MPC members. These are your monetary policy committee members, okay? Each of them have a decision to make to keep rates unchanged, raise rates or cut rates, right? So, they've all kept, it's likely that 9 of them are going to say we want to keep rates unchanged. But if one or two of them come out and say, yeah, we want to raise rates, then yeah, that could lead to a market move also. There is an MPC asset purchase facility vote also. Just be aware of that. We are expecting that change here, as you can see. It's all meant to sort of look for an increase in asset purchases through QE. Okay, so what is expected from this change over here is that a further £100 billion boost to the QE program. Okay, so that's the one that you need to be aware of, guys. That's something that you should be aware of, and you can see how we're looking for that increase over here. This is the sort of the forecast. This is where it's at currently. So we're expecting another £100 billion to step in, and that's, as you can see, the QE program has only been rising over the last almost 10 years. Okay. So as we come up to sort of the Bank of England rate decision, which is going to be announced shortly, so we've got 6 minutes to the rate itself. The next step is what is our view in the market itself? So which assets will you look to trade? Which assets will you look to trade? So, naturally you're going to be looking at, apologies, naturally you're going to be looking at sterling. So sterling will be sort of the main asset to look into. But, you could be looking at euro. You could be euro. Euro sterling would be a good one. Cable is going to be another sort of obvious one, but euro dollar as well, right? Euro dollar, 53% of the daily volume of 6.6 trillion dollars worth is done in the euro dollar. So we expect movement in euro dollar, cable, euro sterling. I'd also be looking at sterling yen. Sterling yen is a very common and sort of popular one for day traders. That's a good one as well. And you can also look at sort of indices. So you could look into, if I go into Indicom and I look into the FTSE 100, this could be another opportunity. Okay, this could be another opportunity. Just to mention, sort of, this is going live, so we are live on YouTube. We've got a group in there also, so feel free to ask questions, guys. If you have questions, please feel free to ask questions. I've got my the premium sort of members sort of in our go-to meeting. Also, feel free to ask questions. The question I would like to ask you: are you in a position? Are you in a position right now? Or did you take a position just now? Right, so how many of you are trading prior to the news announcement? So let's focus on one particular asset. The asset I'm going to focus on, the one that I like to trade most often, I like sterling yen. I'll be looking at sterling yen for a short period of time now. So I'm looking at sterling yen, goes quickly to the daily time frame. Let's have a quick look at the sort of daily view here. And sort of from what I've analysed from the daily view in this morning, let me just quickly sort of delete some of that prior analysis. Let's put in a horizontal ray. That sort of, it's been the recent low, that's been the recent high. So that's your sort of high and low range. Going down to the 4-hour time frame, you can see sort of, double touches in this region over here, and we're breaking lower. So it came to sort of test this support level. This is the key support level that we're in. Has it got support from prior levels? Okay, so that's another sort of, indication how strong is that support level, support and resistance level. In this case, we do have this being sort of confirmed in this region here. So you've got a couple of touches there, resistance in this region here, turning points most importantly in this region and as resistance. Okay, so this is a great sort of level of support and resistance from previous level that coincides with the most recent low. Okay, now moving on to sort of the 1 hour time frame. You can see that there's obviously sort of a downtrend forming. You can see my RSI just below the 50 handle, moving lower, the moving average above. It's staying way below the moving average. So again, indication to further downside. Now it's at a significant support level. It's at a significant support level. Just be aware of that. This is just below the 134 handle. Okay, so let's quickly move down to a 30-minute time frame. This is where I'll apply a trend line. So let's apply that trend line. So almost a double top formation in there. If you move to the sort of lower time frame, my trend line will be something similar to this. Okay, so that's sort of the trend line over here. I can even put a trend line to these lows. So once that initial breakout took place, we do have price almost converging in this region here. If I sort of include all the prices there. So this is the uptrend, series of higher highs and high lows all the way through. And we had sort of an equal low to the prior low. Lower high and lower low, so that's where sort of the downtrend starts to begin. Okay, there is a key level resistance here also to define, sort of in this region here. Yep, so you can see resistance, 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 again resistance, and then breaks lower. Okay, do we have a sort of key level support? I do like this as a support and resistance level. All right, so support comes back in this region over here most recently as resistance. So that sort of highlights all the sort of key levels of support, resistance, trend lines. Nothing else to really apply. We're at this support level. This is an important level to sort of define, especially that we have the data being released shortly. Just put the volume up. Okay, so let's just wait for the actual announcement to take place, and this is how you're going to be looking to trade it. So now I'll be looking at the 5-minute time frame, looking for potential sort of entry points from this point Okay, so I will always look to trade after the news. We don't look to trade, just before the news announcement. If I take a trade right now, I'm just purely sort of, hoping that it goes in my favor. That's not analysis. That's not trading. That's gambling. Okay, you're better off just going to the bookies and putting up, money on a horse. That's not how we do it. We want confirmation from price action. Okay, so we want confirmation from price action. What is our opportunity? So let's discuss opportunity prior to sort of the actual data being released. So we have a potential short opportunity through this key level over here. Right, so we've got that sort of potential short opportunity. I'll remove the stop loss for now. Okay, a few seconds, guys. A few seconds. There's a short opportunity, and we're looking for sort of the long opportunity also. Long through sort of the kilo resistance.
Rate at spot 1%.
Okay, it's maintained.
Unchanged.
So unchanged as expected, guys.
Decision. 745 billion there for the asset purchase target, increased as expected to 745 billion.
Okay, so a quick overview. Okay, rates remained unchanged, so there's no change to the official bank rate, the base rate. Okay,
they voted 8-1 to increase the asset purchase target there, the Bank of England.
Okay, so we had asset purchase facility as expected, a rise of £100 billion.
Decision to hold the bank rate and an 8-1 vote to increase the asset purchase target. Bank of England saying that precautionary behaviour by households and business is likely to persist. They say that the sharp drop in domestic activity is also adding to downward pressure on inflation. They say there are signs of consumer spending and services output picking up.
Okay, so we just minimise this. Give me a second. Just going to bring up.
So that the economy and especially the labour market will take some time to recover towards previous path, and says downside risks to the global outlook remain. Bank of England repeating that they are ready to take further action as needed to aid the economy, and also saying that the evidence suggests that Q2 GDP drop is less severe than thought.
Okay, so key point to note now. So we know that, okay, the rates remain unchanged. We've seen a boost of £100 billion to the QE program. It's all in line with what was expected. The vote as well doesn't really matter as much because the boost has already taken place and we already maintain the same rate. Now, it's all about the statement, okay? It's reading into the statement is crucial, okay? So this is where you should be reviewing the statement and sort of bringing that sort of latest release up, which will give you an insight.
From their more timely indicators suggest that GDP started to recover after April.
Yep, so we can say the committee voted by a majority of 8-1 to increase the target stock of purchased UK government bonds by £100 billion. So it's pretty much in line. I don't really, unless I actually sort of start to read through this statement here and understand this, and sort of, will that lead to sort of a longer term trend direction? Possibly. Okay, but at the sort of current moment, it's pretty much in line with what was expected. Now I'm looking at the technicals. Now I'm looking for a technical setup to take place. Unless we have, I don't know, Andrew Bailey himself or one of the other MPC members coming out, for example, Haldane, and state that, there could be a potential second wave in regards to the COVID-19 cases and so on. So those are sort of the concerns, okay?
Just some more from the Bank of England saying that a greater number of workers are likely to be furloughed in the second quarter.
Okay, so that's, again, when we're sort of looking at the type of tone that's being used in statements and what's being said, you're looking for that dovish or hawkish tone. A hawkish tone generally means that, yes, they're going to take direct action. Okay, they know what's going to take place and they're going to take an action. But dovish is, if there's something that we need to be aware of, we're going to still monitor our indicators and so and so. So, key points to sort of stress, right? So since sort of the COVID-19 outbreak, we've seen this huge amount of fiscal stimulus taking place, okay, fiscal and monetary stimulus taking place by governments and central banks. Yeah, we've seen that especially the Bank of England had cut rates to record lows, as I already mentioned. They dramatically increased asset purchases. They implemented sort of term funding schemes. That allows
so the Bank of England saying the asset purchase program is to be completed around the turn of the year.
Okay, so this sort of term funding was an incentive for institutional banks to be able to sort of fund, and their sort of what's their quota, what's their sort of minimum percentage that they can sort of look to sort of loan out. So this.
The Bank of England also says it's difficult to have a clear understanding of the recovery after Q2.
Yeah, so I mean that's the key question, right? So the key question is, how smooth will the recovery be? Okay, how smooth is the recovery going to be? So they have already exceeded and succeeded in restoring some of the market function. They've shown a positive direction in sort of equities rising. So the key question is, what is the outlier? What could sort of hinder this recovery as we start to ease out of lockdown? And go into sort of normal business sort of trading. So those are some key points there. But so far, we've already broken out this key level support, as we sort of highlighted. Key level support, as mentioned, this was that prior sort of low as well. That prior low, previous level support resistance being tested. Now we're looking for this opportunity to sort of look for a bull run. I might even highlight sort of key level resistance in this region here. Short-term resistance, we've got another sort of key level price support level here. So I'm looking for a much more sort of a bull outcome when we sort of break through the 134.47 handle at some point. This could be sort of another indication where, okay, even though everything's in line with what was expected, so there was not really a huge change or something that was extremely bullish. You had an instant reaction. Yep, it came in line, but then all of a sudden you might start to see the markets sell into this because they hoped for a better outcome. They hoped for something a little bit more dramatic, which has not been the case. So we could see sort of traders step in and look to sell from those highs. Any questions, guys? Are there any questions? Please feel free to ask questions. So we're already seeing a little bit of rejection. So you can see how sort of this resistance level, this downtrend line that we've applied, is a key technical level, right? So, and do remember, what are we seeing on this end? Always focus on round numbers. Yeah. So this is sort of hovering just around above the 134 handle. Okay, just hovering above 134 handle. Right. As mentioned, I mean, when would you enter the trade? Always looking for confirmation. So I'm not going to just react to this news because it's still within sort of this consolidation that we've identified, right? This long-term downtrend. It's got a resistance zone over here, another rejection in this region here. I'm looking for either potentially, if we look at a 1 minute time frame, look for candlestick formation. So another opportunity to go short is, okay, we're seeing sort of this bullish move over here, hitting the resistance. We've got this sort of, what type of candle is this, guys? You should know these candlesticks, right? So we've got almost a shooting star taking place, and then a bearish candle, and a little bit sort of, balance between the buyers and sellers in this region over here, just above the 134 handle. Now we're coming through the 134 handle. So we're looking for another sort of, potential short opportunity once it breaks through the 134 handle. But for a clear direction, you've got to short it through this region here. So the options are that you can either trade it long from this point over here because the overall downtrend is still intact. The overall downtrend is still intact. You can look for a short opportunity now through this region here, maybe through the 134 handle, have a sort of a tight stop loss just above sort of the key level resistance, look to target back to sort of key levels of support in this region here. So that's another potential opportunity. Or you wait for this structure low to sort of break through. Back below sort of 133, 54, 55 in this region here. So once we break through this key level support, that will be a more confirmed. So these two are more confirmed. This is your trading reaction. Okay, this is you trading this result and hoping for that outcome to be in line with your favour. Yeah. Are there any other questions? Feel free to ask questions, guys. Feel free to ask questions. Just coming back to the economic calendar today. So something you mentioned here is that there's a couple of things, which will be of high impact today. Firstly, it's going to be we have US unemployment claims. Okay, so unemployment sort of numbers coming through at 130. We do have sort of that in Canada, the ADP non-farm employment change numbers also. And just be aware that there is some speeches later on in the afternoon taking place by FOMC members as well. Yeah. Okay, that's it from me, guys. Hopefully this has been interesting, giving you sort of a quick demonstration to the mindset whilst you have a high impact news being released. Okay, thank you for joining. Take care, guys. Bye bye.